KOSPI report Samsung Electronics, SK Hynix and Samsung Electro-Mechanics. Hello and welcome to today's KOSPI report. Today, the Korean stock market is being driven by one major theme: AI semiconductor growth and shareholder returns. The center of attention is the KOSPI's semiconductor trio: Samsung Electronics, SK Hynix, and Samsung Electro-Mechanics. Let's start with Samsung Electronics. Samsung Electronics remains one of the most important drivers of the KOSPI because of its exposure to memory semiconductors, HBM, and the broader AI semiconductor cycle. But there is another major catalyst emerging: shareholder returns. The market is increasingly expecting Samsung Electronics to announce additional shareholder return measures after SK Hynix made an unprecedented move. And that brings us to SK Hynix. SK Hynix has announced a massive 40 trillion won share buyback and retirement program. The company plans to purchase approximately 24.07 million shares, equivalent to about 3.3% of its outstanding shares, and retire all of them after the purchase period. The buyback runs from August 20 through November 19. This is not simply a symbolic announcement. SK Hynix has also changed its shareholder return policy from returning up to 50% of cumulative free cash flow to returning at least 50%. That is a significant change. The message from SK Hynix is clear: AI memory is generating enormous cash flow, and the company is willing to return a meaningful portion of that cash to shareholders. The market reacted immediately. On August 20th, SK Hynix surged more than 13%, while Samsung Electronics also jumped nearly 10%, helping drive the KOSPI sharply higher. And now investors are asking one critical question: what will Samsung Electronics do next? If Samsung follows with a stronger shareholder return policy, the Korean market could receive another major valuation catalyst. But there is a third company investors should not overlook: Samsung Electro-Mechanics. Why is this company becoming increasingly important? Because AI infrastructure requires much more than memory. It also requires MLCCs, advanced substrates, and power-related components. And this is where Samsung Electro-Mechanics enters the AI supply chain. Morgan Stanley recently changed its Korean technology sector top pick from Samsung Electronics to Samsung Electro-Mechanics. The investment bank maintained an overweight rating and raised its target price from 2.56 million won to 2.62 million won. The reason is particularly interesting. Morgan Stanley expects the rapid expansion of AI data centers to increase demand for high-performance MLCCs and ABF semiconductor substrates. AI servers require more sophisticated and higher-capacity MLCCs, while AI accelerators are becoming larger and more complex. Morgan Stanley expects Samsung Electro-Mechanics AI-related revenue contribution to increase from approximately 20% in 2026 to 31% in 2027. It also sees substantial growth potential in ABF substrates as AI chips become larger and chiplet architectures expand. In other words, Samsung Electronics benefits from AI memory, SK Hynix benefits from HBM and AI memory leadership, and Samsung Electro-Mechanics benefits from the infrastructure required to build AI servers. This creates a powerful three-part investment structure: memory, HBM, AI infrastructure components. However, investors should not become complacent. The biggest short-term risk remains U.S. Treasury yields and foreign investor flows. When U.S. interest rates rise, high-valuation technology stocks can experience sharp volatility. We have already seen how quickly the KOSPI can move. On August 20th, the KOSPI surged almost 6%, with foreign investors and institutions buying heavily, while Samsung Electronics and SK Hynix led the rebound. But on August 21st, the market became much more volatile. SK Hynix remained strong, while Samsung Electro-Mechanics experienced significant profit-taking after its recent rally. Therefore, investors should distinguish between fundamental strength and short-term price momentum. The fundamentals of the AI semiconductor cycle remain powerful, but after a sharp rally, corrections are normal. So, what should investors watch next? First, U.S. Treasury yields Second, foreign investor flows into Samsung Electronics and SK Hynix. Third, the actual execution of SK Hynix's 40 trillion won share buyback and retirement. Fourth, Samsung Electronics' next shareholder return announcement. And fifth, whether Samsung Electro-Mechanics can translate AI-related demand into higher margins and earnings. My conclusion is simple. The next KOSPI cycle may not be just a semiconductor cycle. It could become a combination of AI growth, cash flow expansion, shareholder returns, valuation, re-rating. Samsung Electronics represents the AI memory giant. SK Hynix represents HBM leadership and aggressive shareholder returns. And Samsung Electro-Mechanics is emerging as an important AI infrastructure component play. Therefore, for the next phase of the Korean market, investors should watch these three companies together. Samsung Electronics, SK Hynix, Samsung Electro-Mechanics. The key question for the KOSPI is no longer simply, will AI spending continue? The more important question is, how much of the AI investment boom will flow into Korean companies, and how much of their resulting cash flow will be returned to shareholders? This is KOSPI Report.